Hello, everyone, and welcome to the latest edition of the David Hittle Real Estate Show. As always, I am David Hittle, a realtor with United Real Estate Louisville. You can visit my website at shopkentuckyhomes.com, and you can give me a call 502-489-1135. So today we are going to talk about how you can secure a low mortgage rate on your next home. It's amazing, isn't it? That's good information to know. And like all my videos, I try to provide you with good educational information, things about the real estate market that you might not hear about on the news, you might not think about that are important, but I provide that information here. If you are interested in anything that has to do with real estate, please click that subscribe button in the lower right hand corner of the screen, and you will become a subscriber and you'll be able to be notified whenever I'm about to go live, whenever I'm about to publish a new video, whatever the case may be. You'll be alerted as a insider. So again, you're planning to move. You want to always get the best deal, the best bang for your buck, as they always say. So you want to sell your home for top dollar, which is perfect in today's housing market, and you want to secure for yourself a low mortgage rate on your next home. Well, if you are thinking about doing that this week, you are in luck. Mortgage interest rates this week fell to 2.97%. It is the first time it has been under 3% since the beginning of this year. And it means that you will potentially save thousands of dollars on your mortgage, things you won't have to pay, the interest you won't have to pay, and your mortgage payment being lower due to this lower interest rate. So this year has been unique. It's been different than last year. Last year, for most of the year, we were dealing with the pandemic. The coronavirus had hit about March, and it devastated the market. It slowed everything down, made it where sellers did not want to sell, and made it where buyers fleeing states that had tougher restrictions had nowhere to go, or very few places to go. But today, we're starting to turn that corner. People are getting vaccinated against the coronavirus. I've gotten my 2 shots, thank you. And we are starting to see an increase in home sales. Not where we need to be, not by far, but we are starting to see it occur. So this year, mortgage rates started to slowly climb above recent record-breaking lows. So the record low was 2.65%. That was the beginning of January. 2.65 was actually the lowest that we've ever had mortgage interest rates ever in recorded history. And they started recording back in 1971, before I was even born. So many homeowners who are planning to move are seeing that the price of their home is increasing. So they're going to get more bang for their buck. They're going to receive more profit on their home because of those rising home prices. But then they were also seeing mortgage interest rates going up, which meant that they might get stuck with a worse interest rate, or the buyers would not want to buy their home because the interest rates were going up. So having them go down again is good. They've now gone down for 3 or 4 consecutive weeks now, which is great. It's great for everyone. Let's just put it that way. So the mortgage interest rates had increased for 7 consecutive weeks. And then this month is the month that they have started to actually come down, 3 or 4 consecutive months here in April. So rates are currently taking a dip, which is good. That means it is the optimal time to sell your home, because not only are more buyers going to be able to purchase your home because the interest rate came down and means their monthly payment came down too, meaning they may be able to afford more home now, but you can sell your home and get into your new home with that locked in interest rate at the low threes, if not twos, depending on your personal financial situation. So, what is the advantage of selling a house right now? Securing the low interest rate on your next home. That is the main reason. That's the reason that will save you thousands of dollars. And saving thousands of dollars, I don't know about you, but to me, that sounds like a great idea. So, January of 2020, which was last year, we had interest rates around the 3.7%. Those have continuously fallen. They spiked in April of last year, back up close to 3.7, but have been steadily decreasing ever since. And they're just only now starting to peak back up. So the start of 2021, January of 2021, is where we started to see the peak. We saw that very low 2.65 at the very beginning of the year, and then from there they have peaked and valleyed to being up to the 3.04 a couple weeks ago and being 2.97 today. Great news. To take advantage of today's real estate market, experts are encouraging home buyers to act now before the interest rates climb. The experts have predicted that for 2021, we will see an average mortgage interest rate of 3.3%. That would be significantly higher than today. But that also means thousands of dollars that you would save if you acted today versus waiting until we hit 3.3. But 3.3 being an average means we're going to see some interest rates above 3.3 and some below. So far, we haven't hit 3.3. We came close. We were at 3.18, but we didn't hit 3.3. So I predict myself, if the average is going to be 3.3, that this low may be the last low you see before we start to spike. We're almost getting to the middle of the year, so that means that we've got to see, if the prediction is accurate of 3.3, we've got to see mortgage interest rates above that, or it will pull that average down. Mortgage rates slid this week for the third or fourth consecutive week, but the experts do not predict rates to stay at this level for too long. They say, and I quote, "For sellers, getting in early optimizes the odds of a quick sale at a good price before there's too much competition." You have to think about that as well if you're selling a home. Selling a home, you want less competition amongst other sellers. If you are selling your home, you don't want your neighbors selling their home at the same exact time, because that means that there are more eyes out there looking, but fewer eyes may see your house because of the other homes in competition. So for sellers, you want to get in now before summertime, which is normally when we see a spike in home sales. But that means acting now. If you want to sell your home quick at a good price before there's too much competition, that means acting now. In this environment, sellers probably really can't go wrong, and that's especially true in the nation's hottest housing markets, where homes are selling quickly and getting the greatest number of viewers online. You have to think about the average home is receiving 4 offers right now. 4 offers today is the average. That means bidding wars. That means you outbidding someone else if you're a home buyer. For home sellers, that's great. They put their home on the market for X amount of money and they might get even more than that. And that's sellers love that. So it is definitely a seller's market. It has been for the past probably close to 5 years now. It has been a seller's market. It remains a seller's market, and it's heating up to be an even bigger seller's market this year. Most experts agree that rates will continue to trend upward, and that is according to Sam Catter, the chief economist at Freddie Mac. Freddie Mac is the big government mortgage bank. Despite the pause in mortgage rates recently, we expect them to increase modestly for the remainder of the year. So looking at their forecast, Freddie Mac released a quarterly forecast, and in that forecast they said, quote, "We forecast that mortgage rates will continue to rise through the end of the year. We estimate the 30-year fixed rate mortgage will average 3.4% in the fourth quarter of 2020. So even higher than 3.3, you're looking at 3.4%. That means, again, thousands of dollars more than you would pay if you were in today, rising to 3.8% in the fourth quarter of 2022. So by next year, they are predicting almost a 4% interest rate. And that goes right along with historical trends. These 3% rates are unbelievable. Just a decade ago, our average was around 6. A decade before that, you were looking at 8. Decade before that, 10, 12s. Way back, these are low interest rates. Unbelievably low interest rates that if you are going to buy a home, you need to take advantage of today. Save yourself money over the long term and get with a realtor, get with your realtor, and get out there hunting for a home today and get it done. Because, like I said, if you're going to do it, you might as well do it when you have the best opportunity and when you have the best rates and the best plan. So again, looking at those projected mortgage interest rates, 3.8% by the end of 2022 and a 3.4% by the end of 2021. So while buyers everywhere want to secure the lowest rate possible, it's important to remember that today's rates are still much lower than that historical norm. Again, while mortgage rates have trended up in recent months, they are still historically low. So relative to 1 year ago. 1 year ago, we were at 3.3%. 2.97 this week, 3.3% last year. You're still low. You're still lower than you were before. So again, take advantage of these mortgage interest rates. You have to. If you're going to buy a home, you ought to do it when the going is good and don't wait for it to rise and you to miss the boat. So, one of the major obstacles in buying a home is your down payment. The down payment can be anywhere between 0 and 5%, depending on your personal credit score, your personal finances, and your lender and the loan that you use. For a VA loan or a USDA loan, there's a 0% down payment requirement. For VA, if they have a medical combat related injury, then they can pay 0 with no VA funding fee. Otherwise, there's a VA funding fee, but even the VA funding fee is less than the down payment requirement. For USDA, which is rural housing out in the countryside, designated by the federal government, you are also looking at a 0% interest rate, and certain other limitations apply to that as well. For FHA loans, you're looking at a minimum 3.5%. For conventional, a minimum 3, can be as much as 5, depends on the lender and your credit score. So, again, down payments are one of the biggest hurdles facing home buyers, but there are programs available. And those programs depend on your income, depend on your credit score, et cetera, et cetera. So, as you are budgeting, and you should be budgeting, everybody should be budgeting, and planning for your home purchase, you'll want to understand how much you'll need to put down. The the myth, the busted myth is that you have to put down 20% in order to buy a home. That is a myth. It has been busted. Don't think that you, as a home buyer, you have to have 20% of your home's value in order to buy a home. It is not accurate anymore. It is not accurate. So, thinking about down payments, looking at 0, if you're VA, if you're a veteran with a combat related injury, you might be looking at 0. If you're looking out in the rural parts of the country, rural parts of the state, you may be looking at 0 as well. But for typical home buyers, FHA and conventional is where you're going to be at. So you're looking at that 3.5 to 5%. So think about it. On $100,000, on a $100,000 home, 5% would be 5,000. Okay. So looking at a $200,000 home, you take your 5 and that's 10,000. So if you are able to figure out these numbers, and it's very simple, just predict based on what size homes you're looking at, the average prices of the homes you're looking at, determine what you will need or what you think you'll need for your down payment. And then again, if you have the right credit score, the right income levels, you may be able to get down payment assistance from your state or local government as well. So they presented me with a map. I love maps. And it is a map of the average time it takes a home buyer to save 10% down. So for a 10% down payment, this is the average amount of time it takes a homeowner to do. So in Kentucky, where we're at here, 2.04 years. So 2.0, just a little over 2 years in order to save 10% for your home. Up in Indiana, they got it a little bit better. Their home prices are a little bit less up there, 1.87. Ohio, even better than that, at 1.67 years. West Virginia at 1.57. Now, Tennessee, they're a little bit wealthier than we are, 2.73. So about two and 3/4 years there in Tennessee. Florida takes a little bit to get 10% down payment down in Florida. Almost 10 years for the average Florida resident to save 10% for their home. Obviously, the two big mama jammas, California, 17 and a half years for a California resident to save 10% down. Oh my good golly gosh. And Hawaii at 16 years to save for a 10% down payment. So if you're looking for the state that you can save for a 10% down payment the fastest, that would be North Dakota. North Dakota, 1.45 years to save 10% for your down payment versus California, 17.56. Big difference there. So thinking about the FHA loan, though, the FHA loan is only 3%. How hard is it to come up with 3%? Talk about Kentucky, just over half a year, 0.61 years in order to come up with 3%. Indiana, again, 0.56. Ohio, a half a year. A half a year to save 3% for your down payment. Florida's even okay. Forget 10 years to save for 10%. To save for 3 will only take you about 3 years. California, of course, still way up there, 5.27 years, so 5.25 years. And Hawaii at almost 5 years, 4.81. So wherever you are in the process, and I have done graphics on this a lot. So let me just throw you a graphic, or throw you a number here real fast. Say you go to Starbucks or whatever coffee shop you like, and you spend $5 a day. And say you do this 5 days a week. So you do $5 a day, 5 days a week. Okay? And there are 52 weeks in a year. So that $25 you spend every week on that coffee, just taking that for an example, would be $1,300. So if you're talking about 10% down on a $100,000 mortgage, then you are looking at right there at that. I'm sorry, that would be 10,000. Ooh, I was never good at math. Don't blame me. But just thinking about that coffee though, $1,300 a year that you would save just from that coffee, just from the coffee. So you have to think about it that way. And then on 100,000 at the 3%, you're looking at 3,000. If you just did the coffee in your savings plan, you could have 3% in less than 3 years. So it is all about the commitment that you are willing to take. If you are renting, it's a whole lot harder to save than if you already own a home, but it is definitely something that you must decide whether or not home ownership is something that you should pursue or whether it is something that you don't necessarily need. For the vast majority of Americans, they want to own a home, and I do not blame them one bit on why they want to own that home. They need to own that home to increase their net worth, to increase they're going to accumulate equity. Home values in Louisville rose 9% year over year. There's no reason why, if you're going to invest in stuff, that you're not investing in a home. It's one of the best investments you can make, and it's the only investment you can make that you can live in while you're paying for it. So everyone, I thank you for watching the show today. Again, I hope, as always, that it's educational, that it helps you to understand the market and understand what's going on. Again, I ask that you click that subscribe button down there in the lower right-hand corner so that you're notified when I'm going to do these shows. And until next Sunday, it'll be May. We're almost halfway through the year already. It's crazy how this year is flying by. But until next week, 2 o'clock, same as always, I wish you all a great day and enjoy this beautiful weather, at least here in Kentuckiana. Have a great day and see you next week.